Hey, this is Stocks Pilgrim. Today I'm going to be doing a trade review. Actually, two trade reviews and two setups that accompany the review. If you don't know what a setup is, it's basically an entry strategy that has conditions that need to be present before you can even think about entering the trade. Currently, especially for those of you who are already in the Discord and Telegram group and website and all that, a trade setup is imperative for your growth and survival as a trader. You must have that to be profitable. Setups are the most important thing. I'm teaching a class. It has 15 different setups. I'm teaching 15 different ways. Today we're going to see two of those. Now, and actually it's more than 15, but we don't have time to get into that. What we're going to do is we're going to go through my thought process, a little background. I usually, the night before, I'll have like a bunch of charts posted with my thoughts or whatever. Today, did not have that. I got up late as hell because I was up late as hell, helping the group with some things behind the scenes, as well as building all the secret stuff that I have for everyone. So if you've been wondering, hey, why is Stocks Pilgrim not on Twitter so much? It's because of that. I get a chance to post a few memes every now and then though. Foremost, those that are taking the class already, you're going to hear a couple of repeat things. But for those who are trying to decide whether or not to join, unfortunately, we're closed. You can't join. However, for select few people, if you want to join the wait list, you can message me. But yeah, we're treating this like the Holy Grail because it kind of is. The people in the group that have taken the courses or taken the first two lessons, which end up being 3 hours each, noticing significant change in how they're viewing the market. That's something that's extremely important. Now today, I don't remember what I said, so we have to read it. Apparently I woke up and said, nice bounce potential here for SPY near yesterday's target. Cool. A break below, we're going to have a sell-off, Tesla strength. Bulls are weak. I looked at SPY 114.468. This is at 10:51 a.m. 10:51 a.m. Let's mark it. All right, let's go into the 5-minute chart. 10:51. That's what we need. And I like to do it this way because I like to fact check myself. It's easy to say, oh, I took this trade at a good time or when I was supposed to or whatever, and not really have clear memory or have a bias, right? So this is a great way to use Telegram as a journal and to check our entries and our exits and all that stuff. Okay, if bulls are weak here, I'll look to add SPY 114.468 put options. Got it. So yeah, I mean, I pretty much saw this, but as you might know, even though I was trading from my phone, let's pretend I wasn't, or let's pretend I was charting at the time. I wasn't. I'm just able to see this. Gap up level, area of demand for various reasons. And so I was prepared. I was expecting to potentially get a bounce. One of the reasons for that is this line here. If you guys are taking any of my classes, any of the courses, you know what this is. And, you know, generally, I don't rely on indicators at all. Sometimes, though, it can give you a pretty nice heads up. So, 1050 is the spot, and I put everyone on notice. And somewhere between 1050 and 1055, there was potential for a short because I took the trade. Bam. So I try to give you a heads up first, right? Like if you're in the group and you haven't really understood my thought process, taking the trade is not paramount for me. Making sure that we are prepared with a setup is number one, the utmost priority. So got in the trade, And you can see we were hanging around here, and bam. Yes, this is Webull Mobile. So again, I was limited, did not have a ton of resources or tools. I don't recommend that, especially for newer traders, but it's something I've become adept at, just the spatial awareness and IQ. So I saw the short, I prepared, took a trade. Now this candle pops up, and I saw some people saying, uh-oh, volume's coming in. And, yeah, it's easy to misread that because it's the first time that you've seen any volume here in a little while. And the problem is that while you might have gotten shaken out of this trade because you saw that move up, remember, the way this candle looked at the time, it was like a strong candle, right? There was no wick at the top at that point. So I think when you see trades like this, or when you see moves like this, the way you can stop yourself from being shaken out is to understand your targets. And in any situation, in any case, many times it's going to be pretty easy to identify. Once again, if you take the classes, you understand why that is. That's part of it. Right? You have the wicks, you have the volume shelf, a couple other factors, but I'm going to keep it moving. So with that said, I generally felt pretty confident here. I got some extra confidence. I mean, I knew my stop levels. I knew my reversal levels. This was not a reversal. So get a little move here, and bulls are still out of steam, right? They don't have anything, and we know why that is. We can kind of see that by paying very close attention to the volume levels. And although we can't see them that well as we zoom in right here. Yeah, so out the gate, just not enough in the tank. So that's something that you should always be looking out for, I think. If something's making a move down, and it might have come down to this area, and a bounce seemed likely, sure. But you notice I'd already made my mind up between here and here. Now, what could have caused me to do that if there was a gap here and shelf here? That's something I can't really tell you about too much right now without taking way too much time. But I was confident in that trade for a couple of reasons. And, usually I'm okay having a starter position to begin. When I saw this move up, and I saw that the bulls did not take advantage of this opportunity, I added more to this trade. So as we made our move from 471 on down, I noticed something. We had a slight move on pretty much no volume. Now this is where discipline needs to come in, because I could have easily said, oh man, the day is over. The bulls are out of luck. In fact, we had a couple other signals kind of pointing to that, right? We had this. However, I think it's very important that when you use indicators that you fully understand how they work, right? So it's easy to look at one indicator on the way down and say, yeah, that's going south, that's decreasing, so I should go short here. Well, let's say we use that same logic at the start of the day. Day begins, bam, short on the trend break. Nice. That would have been a very good entry. In fact, this morning when I looked at my screen for the first time, I was here, but I fell back asleep. I mean, that's just the truth. So, in order to measure one-to-one, we would need to start the beginning of the day here. And we would need to try and figure out where our true short levels are here. And it looks like there's a little trend, right? Trading sideways here, just bouncing, bounce, and a breakthrough. Look at that. I actually beat the indicator to the punch. Pretty cool. But when we're through with that, we need another connection point, and it's here. This is the new trend because this is the new high. Now we have a trend. Cool. With this trend, and I'm pretty sure you can figure this out by this point, what you could do is say, oh, this trend got rejected and it stayed below the trend. While that is relevant information and valid for another kind of trade, there's a fallacy there. We're not going to go into that right now, but let's talk about where I exited and part of why. Number one, it doesn't take a rocket scientist to figure out that this is a hammer candle, which is a reversal candle. But also, it's not very difficult to know what this is called. There's a fractal, bullish fractal reversal. Seeing that come out the gate, and I looked at this candle next to this one or compared to this one, and I decided, okay, how's volume doing? And there wasn't much, right? But this is the second hammer candle. I looked here and I looked at this one. Now, this volume kind of came out of nowhere. The difference between these two, rather significant, even if you can't see it that well from my screen. These two candles had a volume discrepancy. And this one, although it was the strong move down, I'm aware at that point that my entry wasn't up here. My entry was here, and maybe a little here. So, I averaged in somewhere here. And as great as that is, we have to set parameters and discipline for ourselves in a trade to know when to exit. I knew going into this I was day trading it, therefore we made our move here. I gave myself a stop level. Now, not a physical stop, because I don't like to sell at market. I usually have a mental stop, one that I actually have honored and respected over the years. So as this was getting ready to make this increase, what I actually did was I moved from here, the opening price, started to move above the corresponding previous candle. So what I mean is not a move above this one, but a move above this one and above that high. That told me that this fractal, although it's not perfect, it was good enough for me to get out of the trade because I'm not swinging it. I have put options that expire 2 days from here. So for me, this is a pretty solid trade. Being able to acknowledge it and find the trade here, as well as or taking the trade somewhere in this wick, and then averaging on this quick little fake move because you can see there's no volume. That made this an ideal target, although not the best trade for everyone else. SPY trades very differently. You can get huge moves from SPY just from taking a trade that has a solid bit of momentum. Another thing to remember is that as this was quieting down, and I have certain indicators for this, you can see it on the screen here. This real drop from here to here, there was less volatility. With less volatility, in many cases, you're going to have a much easier time getting the order filled in the contracts, and you can pay lesser price. So there was a few reasons why this was just maybe not the best entry, but it was the second best entry, as opposed to being above this area of demand. So that was a pretty solid trade. I want to also talk to you very quickly about exits and why you might want to start finding other criteria to exit as opposed to just a stop level that's built on what someone else is saying or where you think momentum is changing. I think you need to have those stop levels in place ahead of time. In order to do that, you need to have a good grasp of where you are technically. You also kind of want to know what the market conditions are. I'm showing you this because if you can master these things, I think you can be successful and have an earlier shot at success than most others. Trading is difficult, and as I said earlier today, you can't expect to have wins when you're not accurate and precise. Some of you are practicing things the wrong way. And you might be precise because you're doing the same thing over and over again, but if you're doing the wrong thing, that's why you're losing consistently. Remember, practice does not make perfect, it makes permanent. So this is all about building the correct habits needed. Usually, most evenings, when I do the charts for the group and I post them, you've probably seen these around because people are stealing my way of doing things, and that's okay. You're not going to figure it out. There's no calculation or formula. Those levels are from experience. Now, you can ignore the levels that I didn't change, but had I changed them or had I drawn them, I would have used this as a pivot, most likely. Yeah, maybe the high here. Maybe they're, yeah, tough to say. However, when you go into the 5-minute chart, doesn't matter what chart you go into really, but especially the 5-minute. You can kind of see there was a short opportunity up here before. Those who take classes understand why I'd be drawing this level like that and why I might do this. If you haven't gotten to those particular classes yet, don't worry. You will learn that shortly. So here, everything I've just said in this trade so far is way easier. And this is the method I use to apply in my head, even when I'm not in front of a screen. So as we make this move, or I should say, SPY makes this move, just at the beginning of the day, there's nothing. This is why, I know I needed to get my sleep, but had I seen this, oh yeah, I would have taken this trade short immediately, right out the gate. So, no volume, hardly any, right? And not only that, but you tapped into this area of demand, or at this time of supply, got shut down pretty fast. Bears didn't do such a good job either, not very much volume. But the setup here, they did something in particular. Now, I don't want people going and stealing the names of my stuff. And, but there is a setup that we will learn in the classes. But essentially, it's predicated on this idea that bears realize this very quickly. Very quickly. And so bulls got their casual move up. Had to be searched at the gate, though. And now you're good to go, and you let your guard down. And rather than treating this zone like you should, rather than treating it like a hostile area, you get very complacent. So complacent that you pretty much let this indecision candle and this, or become this hanging man candle, and then getting a confirmation candle on low volume. That's yikes. And if you know anything about volatility, you also understand that losing that volatility on the way up, also not great. Momentum not on your side. So as a bear at that time, I'm trading a bearish setup. Everything is coming together very nicely, especially the accumulation distribution line peaking. And those that are in the group know that I use a different indicator to measure this, but specifically with regards to volume. But this rejection here, notice how the selling picks up right after. Once they're sure, if I had used a level like, let's say maybe this one or this one, and I wanted to make sure that the momentum, or the direction I should say, had changed, I would wait for a close below one of these candles, which happened. Could have taken the short and would have done real nice, and that's why you get these two strong candles, almost as a confirmation from the bears that they have won this exchange. It's funny, it takes this candle for the volume to show back up, and sure enough, that's exactly what happens. And they finally get the move down into here. Now again, as I said, I was kind of already expecting that. No guarantees though in this market. A couple other things happened that were very interesting, such as this move below this trend line, which means most likely no longer relevant. You can see that break here. All that said, it was a good trade. I walked the group through this. You guys were in the group and you're seeing this each day. Kind of understand a little bit more about what my plan is, which is to get you the most pertinent information and also to kind of give you a head start on everyone else when it comes to taking these trades. The last thing that we'll go over is Tesla. I won't cover the entire Tesla trade because there's a lot to say, but it is pretty textbook. So I did get some questions. Some said, how can you go short SPY, but at the same time be a bull on Tesla or any S&P stock that's known for kind of trading in the same direction as the market? Well, foremost, I don't really know that I agree that Tesla always trades with the market, but I agree it's unorthodox to trade one to the upside and one to the downside simultaneously. Foremost, these levels, once again, were not updated this morning. I did not look at these levels prior to, but only because I know how to, I made these levels, right? I created these on these charts that a lot of the group uses, and I know what I was looking for. So we began here, right? Foremost, a gap up. That's pretty cool. Nice gap up and a retest of the risky long trigger, which still works as a pivot, and we're off to the races. And this, I couldn't even tell you exactly what the morning was like because I was asleep. So that's right, I was knocked out. I'm gonna use the 15-minute chart for a little bit of clarity. Number one, this first candle, not too concerned with, just a real sharp reaction. Volatility starting to increase, accumulation increasing right after. Very cool. So that said, I watched and I looked briefly, I should say. Nothing seemed crazy. Nothing seemed worth getting out of bed for. Not that there weren't opportunities in the market. Just understand, I was really damn tired. I was awake for 2 days straight. So very nice, very cool. Volume is there, and you can pretty much see, yep, you're running into some supply here, and that's all good because you need that. You need the stock to change hands. And sometimes you don't even need that. Sometimes you really just need others to reassess, especially institutions that carry most of this trading volume, to reassess what their plan is, to reassess their risk to reward, to allow them to hedge, mitigate certain things. And there's a million other things that are going on in the market at the same time. However, as it applies to me, I think my first comments on Tesla were, oh, here we go. So adding Tesla 114, 1100 calls for the same reason. Now, when I said that, what time did I say? Yeah. So 10:59. So we're going to be at 10:59. I want to make sure that we have a really good understanding of the risk to reward here. Our nearest area of support is going to be here. Like actual support, where some people would even call that key. I wouldn't call that key support. But there's a volume shelf here, so I'm okay with that. Here's where it gets funny. So on the 5-minute chart, which is a little, it's a little too much for some people. The stomach can't handle that kind of volatility and movement, but have a look. That increase, decrease, increase. Oh, this should be like a breeze for you. Because the volatility is decreasing. The range is decreasing. That's the perfect time to buy options. You generally you don't want to chase anything that's already very volatile on the day, especially not by comparison to itself. When something's trading more volatile than usual, or with more volatility than usual, you're going to pay a lot more for that contract than you should have, most likely. I'm not saying it's a concrete rule. Don't trade based only on that. What I noticed here, and what I paid attention to when I finally got up, I saw, okay, volatility pretty low. And, again, trying to define trends with the information that you have, this is a pretty clear trend. Bam, the bounce. And I took the trade at what time? 10:59. Yes, I do those in real time. So seeing that, bang, yep, 10:59, somewhere here. And that, my friends, is called, this is 11. Okay, I'm about to say, because that's not great. So 10:59, probably 10:58. So that means it's somewhere in between this candle, but we know that this one, if this opens at 9:30, we know these are candle opens, and that also means that this right here, opening at 10:55, taking the trade at 10:59, that means I'm somewhere in this candle. I'm taking credit for it. That is nailing the bottom of a pullback. Not a Fibonacci level was drawn. Not at all. In fact, if you use Fibonacci and you drew it from here, you kind of would have gone against some of the rules that are popular with traders, I guess. Let's talk about the rest of the trade. Got a pretty dope entry. Get this weird shooter candle. That's fine. It's volatile. We know this. We've seen it. We saw that little spike right here. It's okay. But then the volatility dies off a little bit more. Now, for me, I don't know about you guys, but I kind of like that because I want to make sure I'm fully positioned and ready to go, and also don't want any extreme selling to the downside. Usually you'll see signs of volatility ahead of time. That said, if we're really talking about support, just say I'm just drawing this. Something simple. I want to try to keep everything on the up and up. Right? I don't want Tesla to get out of hand. I generally need to be conservative if I'm day trading this. You saw I marked this as a scalp. Let's run through the thought process. NVIDIA added a few more to both positions, just for the record. 1105. 1105, where are you? Wow. Looks like I got my order filled. Nailing the bottom twice in one trade is insane. All right. Indecision and price action cools volatility. Yep, I just explained that, pal. The SPY fake out candle is very common. Yep. Then it's just a lot of memeing. I don't think I said anything profound. Oh, here we go. Falling wedge break on Tesla would be textbook, 1116. So I'm just showing you that, not only was I still committed in this trade, but I was confident enough to be able to kind of tell others, hey, this is what you're looking for. Okay. Now we got the break. And what I mean by that, I could sit here and draw lines all day. I'm not gonna. But one thing you might want to start taking note of with most of these trades, you're gonna get huge moves like that, and a lot of you I know have a tough time determining where your line should be. You can go watch some of my videos. Like, I don't know if I discussed this in the beginner's technical analysis video or not, but pretty much this was setting up the whole time, and it was kind of glued to this trend, which is cool. And all we needed, right off the open, we had the volume we needed, especially here. And, shows up here and there, some profit taking, that's cool. Doesn't completely die off. And believe it or not, besides the volatility, I was not really using any other indicator for this. Not at all. Now, we get our break, but after the break, we get no retest. This is a pretty good sign, even amidst the lower volume. Even when bears sold or applied pressure, it was pretty pathetic. I don't really care about this making that dip either, because once again, this should be accompanied by some stronger candles. This is divergence. it's also divergent from the accumulation distribution line, which is not volume weighted. So that said, bears had their opportunity, did nothing with it. I had a potential entry and exit in mind before taking the trade. When I took the trade, I adjusted based on where my order was filled at and thought about what my exit was. My exit was always changing because I planned to day trade this, but my stop was never in question. And I pretty much had a chill day. Just continue, sit back, relax, watch things happen. Cool. Okay, and kind of got flat here. Now, I'm not gonna tell you what to do with this kind of thing, but I will say something I looked for was just holding support, right? Like, this is a new trend. By the time these three hit, it's a new trend. That is a new trend. Can we stay on trend? Absolutely we can. And did a great job too. There's that double top in this indicator that sometimes precedes other kinds of moves. Not necessarily a sell-off, but definitely something to look out for. And we had our little quick break here, a move up, and finally broke that trend. And I think this is from here, would you look at that? That actually happened to be the high of day. Well, this is the full candle high of day, for reference. Closing price, 111.13. Closing price, 111.13.18. So the indicator or the break here on correctly drawing your trend, it's a difference of about 18 cents on a stock that's trading at $1,100. Bounce, peak. Oh, now that I've corrected it, see, I made it sharper, made it more precise and accurate. Off by just a hair. You know you're doing well in trading when your biggest frustration or your gripe is that you didn't nail the price to within 18 cents. So this is where I exited. This was part of my reasoning for exiting. Actually, I think I exited here because I saw the volume decreasing, and I saw this was the bull's response. So I actually exited here instead of here. But I limit sold, not market sold, and the strength that was there was pretty solid. It allowed me to exit the trade, as well as the runner that I had. I got a chance to see some strength. I still have my runner, and I still have my runner on my SPY calls at the end of the day because I did trade SPY to the upside after. It's been 30 minutes. 33 minutes. I have food downstairs. I'm starving. But yeah, if you want to join any of the classes, I mean, this is where people are, they're changing their lives. I don't, publicize this. You notice I didn't go to Twitter and say, hey, I got a new course that I'm teaching. You can join or you don't join. It don't matter. I mean, to be honest. But at the same time, for those that are looking for a resource where you can learn, it's hard work. You're going to have tough times. If you don't have your mental discipline together, it doesn't matter what I say, you're not going to be able to trade profitably. I'm wrong sometimes, and I am imperfect, and I'm still learning trading. I will continue to learn. I'm a lifelong student. There's no magic pill. You're going to have to work your ass off. You're going to lose money, all those things, et cetera, et cetera, et cetera. Don't join my group, whatever, all those things, I want you to be cautious. I don't want you joining and thinking it's simple. It's not. There's a lot of learning involved. It's hard work. But yeah, in the setups course, I will be going over when to enter and exit trades, risk reward ratios, calculating those scenarios, proper position sizing, how to take profit profitably, stuff like that. And yeah, teaching 15 different setups. And if you haven't joined the group, it's been closed for a little while. Like, I've not allowed people to join, but send me a DM, or you can go to the link in the description. But try not to message me on Twitter if you don't absolutely have to. Okay, cool. Peace.